Well, good evening, traders from around the world. Thanks for joining me on this special presentation. What I'm going to do is address the current sort of trajectory of Apple in the marketplace moving in and throughout the year 2014. So there's a lot of people out there in the world who love Apple. They love the company. They love probably owning the stock, but at the moment, it's not really giving us the most compelling signals to be holding this long term, especially if you're holding it on the buy side of the trade. Now, what I'll do to begin with is address the imperfections and sort of the overhead supply which is going to come into Apple if in fact we break above $552 a share. What I've done, I've actually changed my daily chart to what we call a weekly chart. So each candlestick bar here is just reflecting 5 trading days, or each week's sort of trading session, as to which direction the price has moved. And as you can see, if we have a look at 2012, you can see that it was quite a bullish year for Apple, or at least the first 3 quarters of the year, until we peaked out here at $700 a share. We were in some form of mania. All right, it was some form of a bubble on Apple, but what you can sort of come to the conclusion with is that there are a lot of passive investors, a lot of mum and dad investors out there who are actually buying Apple throughout the year of 2012. What that means is people who did that and acted on that are actually showing negative positions now in their own investing and trading accounts. So all of these trades on the long side, which were made throughout 2012, are actually sitting in people's accounts as negative or losing trades. What this means for Apple is that if in fact, now what I'm doing is zooming in on the detail. Now I've got a daily chart. If you look up here, all I'm trying to say is that if we do break above 552.50, I mean, we do have upside targets on Apple at say $567 and $612, and then ultimately up here at $700 a share. All I'm trying to say is that there's going to be a vast overhead supply of selling pressure if in fact Apple wants to break out and move higher. As you can see, we're trading at Apple here about $530 a share. We are, what I should say, today's date is the 20th of March 2014, and really we haven't really gone quite a way since October 2013. For the most part, we've been range bound in Apple, and we haven't really sort of made a clear direction. We haven't really established a higher high and a higher low repeatedly, which essentially makes a trend according to Dow theory. If anything, we're actually setting up what we call a reversal. You can see these lower highs which are being established in Apple at the moment. This is very concerning for people who are still holding Apple long, and who are still hoping anyway that it's going to come back so they can actually liquidate their original investments for a short loss or a small loss, or if anything, just a simple break even. So really what we're talking about, and anyway, going back to the fact that we haven't really moved too far since October 2013, the volatility in the trading behavior in Apple is actually being very suppressed. It's been very, very suppressed. It's very unlike Apple to move sideways for any longer than really 2 or 3 months. And as you can see, we've actually been moving sideways for really 4 going on 5 months now. And this is something which is going to change very, very soon leading into the future. All I need to do looking at this picture is just bring up the Bollinger Bands, because this is going to reflect obviously the low amount of volatility in the share. So as you can see, the Bollinger Bands are starting to squeeze nice and tight. And all this is saying is that momentum is about to come back into the share. So another advantage of what we have anyway is sort of short-term traders and market technicians anyway who enter and exit the market within days or weeks, is that we can simply set trades up based on price, and then we can sell at logical target areas. The reason for making this video anyway is because I do believe there's actually more opportunity to the downside on Apple than there actually is to the upside. Now again, please don't take that personally if you are holding Apple, if you're a long-term bull on Apple. It's just my own perspective, and I'm going to sort of, I guess, explain my reasoning for that right now. So with Apple anyway, again, we've spoken about the overhead supply, the selling pressure which will come into Apple. We've spoken about, I guess, the lower highs being established across Apple. We've spoken about the low volatility. We've spoken about this long-term sort of consolidation since October. Now the only really short-term thing holding Apple up at the moment is just this open window right here. That is simply it. If we fail this open window at 507, then let me just put the downside perspective into, or the downside sort of trajectory into perspective for you. Now what I'll do, I'll simply move out to a weekly just so you can see this. Actually, I'll stay on a daily anyway. And what we try and do as traders is try and find areas on a chart which are going to act like vacuums. And what I mean by vacuums is really just areas on a chart where there's not much support holding price up and there's not much resistance holding price down. We call them a vacuum because they'll either move higher or lower very, very quickly without any struggle, and very, very quickly, which is good as we like to trade options. So really for Apple anyway, again, I've spoken about that short-term open window. That's fine, and I'm going to remain, I guess, skeptically neutral until that fills. But if we get down into the area of $507 a share on Apple, then the downside targets again become very, very rewarding. First of all, we've got $491.40. If that doesn't hold, we can re-enter about $480 a share. If that triggers, then we're looking at prices down about $420 a share on Apple. Now, if someone mentioned that to you in 2012 and said, hey, 2 years later, you bought at $700 a share, and there's a possibility that Apple's now going to be worth, say, $400 a share, taking in, what's that, almost a 40% loss, it would freak a lot of people out, wouldn't it? And again, that is where the panic actually comes into markets, when people start selling in fear. They cannot take the losses anymore. The losses keep adding up. They're getting absolutely hammered on their own investing positions, and they start to panic. It's the worst position you can be in as a passive trader and investor, but it happens all too often in the stock market. And it's unfortunate because people just don't educate themselves and come to expect the things which happen quite a lot in the stock market. So that is essentially the argument for the bearish side breakdown. Yes, we have earnings coming up, which appears to be on the 21st of March 2014. That's all well and good. We do have approximately a month, almost to the day, until earnings is announced. So we've got 20 trading days. Will we see these targets hit, or at least these entries hit before then? Who knows? That is, a guess that no one can really answer at the moment. But at least we have a trading plan to trade Apple. Now, I've really addressed the downside. Again, what I'll do is address the upside, because there is potential for Apple to break out and for this conclusion or this hypothesis to break down. One thing you need to do and really come to the conclusion and be sort of content with as a trader is to understand that you're probably going to be wrong more times than right. And the thing that saves our butt is that we use price contingency orders for us to enter and exit our trade. So until price proves us right, then we simply won't trade a position. And really the best position or the best actual place to be buying Apple is really up here about 550, 250 at the moment. I know it's quite a way away, but when you get that volatility break, then it shouldn't be a problem to break out above 552 and at least move to 567 really in a couple of trading sessions. So there is a lot of short-term opportunity on Apple at the moment. There is also a lot of cautionary signals being generated, more so on a primary and a longer term time frame. So that's me addressing Apple for today. It is a Thursday down here in Australia. It is the end of Wednesday's trading session. In the US, I don't expect this to happen tomorrow. This is going to play out over the coming weeks and months, but at least you have some indication of what to expect on Apple trading in and throughout 2014. So all the best, everyone. Enjoy your week. I'll catch you over the weekend in Pivot Point Pro. Goodbye.